London Comcast, the American cable company, may have thrown a $31 billion wrench into plans by Rupert Murdoch and the Walt Disney Company to expand dramatically into Europe. Comcast on Tuesday said it would bid to acquire Sky, the British satellite broadcaster, in a deal that would value the entire company at roughly $31 billion. Comcast said it would use Sky as a platform to extend its reach into Europe, where the broadcaster has 23 million customers and holds rights to show the English Premier League and several other major European professional soccer leagues. If successful, Comcast's offer would thwart the thus far unsuccessful efforts by Mr. Murdoch's 21st Century Fox to buy the nearly two-thirds of Sky that it does not already control. Regulators in Britain have thrown up roadblocks to a 21st Century Fox purchase, saying it would give the Murdoch family too much control over the country's media. 21st Century Fox's efforts to buy a majority stake in Sky fit into an even bigger media shakeup. Once it takes full control of Sky, 21st Century Fox plans to include the broadcaster in a package of media assets it wants to sell to Disney in a $52 billion blockbuster deal. It isn't clear how a Sky purchase by Comcast would significantly change the Disney-Fox deal. But it will, at the very least, likely make it more expensive for 21st Century Fox to buy all of Sky. Shares of the British broadcaster jumped by nearly 1/5 in early Tuesday trading, suggesting investors expect 21st Century Fox to back away or come back with an even better offer. Disney, Comcast, and others are rushing to strike major deals in a swiftly changing media landscape. Consumers increasingly stream their movies and television shows over the internet. Upstart technology companies like Apple and Amazon nurture ambitions to rival Hollywood's big studios. Online broadcasters are even increasingly bidding for the rights to show sports, long a major money-making business for traditional broadcasters and cable operators. Comcast said in a statement that about a quarter of its revenue would come from international operations should it seal a deal with Sky, up from 9% currently. In addition to its other businesses, Sky has also announced plans to start streaming services in Spain and Switzerland. We look at Sky as a media company, Sky News, Sky Sports, Sky Movies. Brian L. Roberts, Comcast's chairman and chief executive, said on a conference call with analysts. There's tremendous presence in the content creation, not just the distribution. Comcast said that it is seeking control of more than half of Sky's shares with Tuesday's offer, but that it is ultimately interested in acquiring all of the British broadcaster. A Sky spokesman declined to comment. Mr. Roberts said he had not spoken with Sky's board, citing British takeover rules. Disney and 21st Century Fox representatives did not immediately respond to requests for comment. In a research note on Tuesday, Polo Tang, a UBS analyst, said that Sky could be strategically interesting to a variety of bidders, given its content and its broadcast and streaming distribution network. It also recently retained the rights to the Premier League at a lower cost than analysts expected. Mr. Tang said that the benign outcome of the Premier League auction potentially gives Fox scope to raise its offers. Mr. Murdoch, the 21st Century Fox executive chairman, has tried for years to secure control of Sky, but he has found his efforts thwarted by a phone hacking scandal and regulatory concerns about allowing him to expand his already significant holdings in the British media market. In December, Mr. Murdoch agreed to sell the entertainment arm of his business to Disney. 21st Century Fox is hoping to complete the Sky deal before the Disney sale is finalized. But in January, a British regulator provisionally rejected a bid by 21st Century Fox to take full control of the broadcaster by buying the 61% of Sky that it does not own. Under the terms of its proposed bid, Comcast said it would pay £12.50, about $17.50, a share in cash. That would represent a premium of 13% to its closing price on Monday and is about 16% above 21st Century Fox's current offer of £10.75. Mr. Murdoch, the 86-year-old media mogul, remains a divisive figure in Britain. He has repeatedly tried to take full control of the broadcaster, which he started in 1989. By owning the rest of Sky, 21st Century Fox would be better positioned to take on the likes of Netflix, Amazon, and other streaming giants. In 2011, Mr. Murdoch was forced to withdraw a $12 billion offer for the rest of Sky as a firestorm erupted over phone hacking by the news media in Britain. The scandal eventually led to the closure of the News of the World, the first newspaper Mr. Murdoch acquired in Britain in the late 1960s. In December 2016, 21st Century Fox agreed to buy the remainder of Sky it does not own for about $16 billion at current exchange rates, in an effort to expand its global reach and cement Mr. Murdoch's legacy. But in June, the Office of Communications, or Ofcom, ruled that Mr. Murdoch and other company executives were fit and proper to hold broadcasting licenses in Britain, but that the deal warranted more scrutiny. It also said that a sexual harassment scandal at Fox News had amounted to significant corporate failures. Last month, Britain's competition regulator provisionally rejected the deal, saying it would give Mr. Murdoch too much control over the country's media and that the transaction, as proposed, was not in the public interest. In Britain, Mr. Murdoch's newspapers include The Sun and The Times of London. The regulator said it was concerned the deal would give the Murdoch family too much influence over public opinion and the political agenda. It noted at the time that Murdoch-controlled outlets were already consumed by nearly a third of Britain's population. In hopes of winning over regulators, 21st Century Fox has offered to establish a fully independent editorial board for Sky News and to continue to fund the Sky News brand following the transaction for at least 10 years.